dive is Mr. Rajiv Poddar, who is a Joint Managing Director at BKT. BKT is now foraying into consumer tires. It was one of the largest players in the off-highway tires for now, but now getting into a bigger segment. Rajiv, this segment or the tires industry itself is pivoting towards premiumization. What forced you to get into the consumer tires, which is highly competitive?
So I think it was something that we've been working or thinking about, and as the opportunity in India is growing, you see the road networks that are being developed, the use of roads for transportation of goods or for people is going up. So we thought, it's a good time to cash on that opportunity that is being made available to us with the infrastructure development coming in. And also we thought it's a good time. And also in the last 5 or 6 years, we've been able to create a good brand name for ourselves within the tire space. And we thought, it's a good time to extend that into the consumer space of things. And that was really the big point of us pivoting towards this as a extension of our existing portfolio.
Do you see the tire industry entering a new growth cycle, given the fact that now you not only have premium tires coming in, but also technology also coming into this space?
So yes, I think the growth cycle is going to be there because as I mentioned, the build-up of the infrastructure is coming up. And this is also right time because there will be premiumization. There will also be a lot of the auto vehicle manufacturers are looking at newer technology such as EV vehicles, and also our tires will already be EV ready. Even on the ag space, the tractors a lot of them are now electrically driven. So our tires are already EV ready tires. So even when we get into the consumer space, we will be coming up with tires which will be EV ready. So it's good time to sort of get into it.
How do you, look at when you get into a new market? What is the growth that you see for yourself and maybe for the industry as a whole? Because this market is growing at 6 to 8% on an annualized basis. Do you see this growth to sustain for a longer period of time?
Yeah, I think that's the reason why we are looking at it, because we believe the market will grow even bigger than the 6 to 8% over the next few years. And then it will slowly start sustaining at those levels. For us at BKT, it's very important, that this whole, to complete the entire range of tires that we are manufacturing today, from off-road, which is there, so the agricultural space is there, construction, mining is there, and now we are pivoting into the on-road as well. So it's a good opportunity for us. We'll complete the entire basket of products available from our offerings to the end users. So that's what made us get into this.
From a B2B to B2C, two different segments and two different competitive intensity as well. How do you see both the segments growing? So
for us, both the segments are important, and there is similarity, but they're different at the same time. And when I say similarity, today a farmer, for example, he's using a tractor in the day, but he's also using the motorcycle or two-wheeler, scooters and etc. So he's a consumer for us in both the gamut of his life. So in that sense, it's the same, when he's exposed to a BKT product in one area of life, and the second area is an extension of it. So that's why we see that we will be able to manage both the sectors. Yes, at the same time it is different because the consumer space is more, as you said, competitive. So we are also separating different sort of a vertical to look at that business. So we'll have one set of vertical looking at the off-highway business, one set of vertical looking at the on-road business that we call. And then the third vertical of ours, which is there, is the carbon space. So we will be having 3 verticals within the company.
Okay. If you look at the entire growth there, competitive intensity is increasing there, because there are multiple players now coming in. Many of the domestic players are bigger players now, which between the tire market, you have the replacement market and the OEM market, which is there. Where do you plan to enter, and which do you see some disruption happening in that segment as you enter?
So before I answer that question, I'll take you to a different route also. When you talk about competition, intensity, big players, etc., we are if I can call ourselves, we are the Indian multinational.
True.
We've been present in 160 countries across the globe. Okay, it may be in for off-road tires, but we are competing with the multinationals over there. So, the bigger European players, Western Asia, Western American players. So we are competing with them, the Japanese players. So all the premium players, we know how to compete. So we are not afraid of competition. We believe that we need to do the best that we can do in terms of product quality. We are renowned for our quality. That aspect will continue into this on-road business. The second aspect is service. So as you know, we're talking about premiumization. The tire industry is moving from a commodity business to a service business.
True.
And that's where we would like to differentiate ourselves. And that's why, when you spoke about earlier premiumization and all coming up, this is also one aspect. So we see this as a great opportunity when the overall business is shifting a little bit to come in and capture that market.
How do you see commodity pressure in this entire whole thing? We have seen of late a lot of rubber prices are are heightened at this point in time. You have, because of crude, your carbon black and others are also getting impacted. But do you see commodity pressure also impacting the segment?
Yeah, I think it's a big risk for us. I mean, that's one of the risk factors is the commodity aspect. A lot of our raw material is reliant on oil and oil derivatives. So with the way the crude has shot up over the last couple of weeks, it's a problem in the sense that you have to balance it. So I think the volatility is too much at this moment. But these are short-term issues. Yeah, we don't see it being in the long term. Short term, there are two issues. One is the price impact, which is there, which we are going to be looking into. Second is also availability, short-term availability. But in any business, you'll always have short-term problems coming up, but longer terms, it will automatically resolve itself.
And what kind of pressure has been there for the last 1 month, 1.5 months? Has prices increased, and have you been able to push that prices across to the consumers?
So yes, prices have gone up to about 15 to 18%. We have there is a lag because you have some stock with you, so we are trying to minimize the impact to our end users. So we are trying to slowly, at some stage you'll have to pass it, but we'll do it in a staggered way and to the most minimal effect of transmission that we need to do to the end user.
How does that play out in a consumer segment? For now, you've been in off-road segment. In a consumer segment, it's a very price-sensitive one, right? And 70% of the market is a replacement market, 30% being the OEM market. How does it play out in that segment?
See, I think the commodity for the raw material, whether you're on-road or off-road, is same. At the end of the day, it's going to impact every manufacturer, and every manufacturer is going to go through the same cycle. So I don't think that's going to be a challenge for us, whether it is on-road or off-road, because it is for the entire industry that has to go through it. So we are quite confident.
Does it lead to short-term demand slowness because people, instead of going for replacement, they may go for retreading of tires?
But that's also true in off-road, no? So even in your mining truck tires, they are doing retreading is very big there. So I think that cycle will be same for both. And as far as the demand goes, within India at the moment, we are quite confident of a strong demand. What we are seeing, the demand is resilient to these factors, at least in the midterm. So we are quite confident. Also, you had asked a question about OE and replacement.
Yes.
So at the moment, our focus is on replacement market. Even in the off-road, we've so far focused on replacement. So as an overall group strategy, we will be focusing on the replacement market and slowly making our way into the OEMs.
And you see, do you need to have a different kind of network for a replacement market in India? Because off-road has a different network and consumer play has a different network. Do you think that is one of the modes to succeed in a replacement market?
So we've, even in the off-road within India space, in the last 5-6 years, we've had good growth and great market shares there. So we have focused on the network. So even in the on-road, as you rightly said, network is going to be important. So we are already making our way, and today our network is already pan-India available for on-road tires as well. So we are quite confident of our network.
you're spending a lot of capital on this new segment, which you're creating, right? To begin with 3,500 crores, you have investment plan, which is their ambitious target that you have of 23,000 odd crores by in revenue by FY 30.
2030, yes.
30 there. So if you look at the growth that you're looking at, it's going to be much more than the industry growth going into next 5 years. Do you see that play available in this market, given the fact that there are multiple players entrenched already?
So what we have to do is break down this strategy into, the vision into three parts as we've done. One is the off-road, which has our expertise and we've got tailwinds. So we are looking to grow from 5 to 6% global market share to about 8 to 9% global market share, which is doable in the next 4 years now. Carbon, we are looking to increase and take our market share from current levels of capacity to 260,000 metric ton to 3.5 lakh metric ton. So that's where we are looking at taking that. And the third is the on-road. On-road, we are only looking to capture about 4% of the market space within India. So I think that's a 1% a year kind of a scenario for the next 4 years.
That's a very conservative market share that you've...
So that's why if when you ask me, is this doable? So it's a conservative sort of a vision that we've taken, but at the same time also achievable. So, though it sounds 1% a year, but first 2 years would be more of seeding and then you'll see it ramp up.
Can you also take us through your export strategy? Will it be only for off-road or you will also bring the on-road to export market as well?
So on-road, we'll be taking the CV tires to Americas and the passenger and two-wheeler to Europe. That's the current plan. But that will be all done after we focus on India. First 2 years would be fully dedicated to focus on India. And then slowly we would make our way into exports within these markets. Also there we already have a good brand name. We have an established network. So all those things will also help us in this business.
Does that overseas market also is fragmented like the Indian market, where off-road has a different network and on-road has a different network? Or is it a combined market in that sense?
There is some overlap. There is some overlap there because the farmer over there also has his own passenger car and also has two-wheelers. So there is some overlap there. It's not as fragmented as in India, but it's not totally overlapped. So it's in between.
Give us a sense of the tire industry from a point of view of the challenges that you are facing currently. As we briefly spoke about, the crude impact is there. But over and above that, do you see demand being a little sluggish in some segment, impacting growth for now?
So I think, as you rightly mentioned, so we have two short-term challenges. One is the commodity prices, which is undergoing a lot of volatility. Crude shoots up, goes down, comes back up. So we don't,
How do you manage that kind of volatility?
I think nobody can manage that kind of volatility. I think it's more of a data analytics that we've done and put in, the processes we've put in place is helping us ride through these tides. So that is one thing. Of course, second is because we are also from an export point of view, our geopolitical scenario, there is also again volatility there. So it has an impact. Last year we were hit with tariffs as a country. Then our Honorable Prime Minister and his team did a great job to get that out. And then you had this other geopolitical scenario. So a lot of geopolitical risks at the moment from a volatility point of view. So these are the two major concerns. And demand at the moment on off-road, we see it to be very resilient. On-road, we are too small to actually get impacted by demand. When we are just making our way in, the growth is going to be so negligible. The market share is so small that we don't see demand being an issue for us.
In the off-road part of it, tractors, the GST came down from 12 to 5%.
Yes.
Did you see a demand coming through? Yes. And is that a sustainable demand that you've seen since, say, September 22nd when it was announced?
So I think, yes, again, great work done by the government to give that sort of a stimulus to us. And the numbers are speaking, tractor manufacturers are record number of high on a monthly basis. And it's being sustained over this long duration of 5-6 months. Similarly, for us in sales, in India has been growing in the agri side. So we see it as sustainable.
And how do you see CV demand growing? You will be entering that segment as well. So do you see CV demands also reviving now?
Yeah, we are quite positive on that. And we see it, I mean, what we hear from the manufacturers now that we are in touch with a few of them, they are quite robust and quite upbeat on the demand. So we are quite positive on that aspect as well.
For a new player like you, what does it take to crack the OEM market? Because that's a very small, cozy players, having a strong relationship with one OEM or multiple OEMs, which is there, right? And every OEM has a different kind of tire manufacturer attached to them.
So when you say new player, yes, on road we are new, but on the off-road space, we are an existing player with a long history, and a lot of the OEs also cross out into the off-road space. They are also into tractor manufacturing or commercial vehicle manufacturing, mining truck manufacturing. So there is a lot of cross. We already have relations with them. We just need to extend that relation into this on-road business as well. So we are quite...
How easy it is for a new player?
So for a new player, we are...
Like, I mean, you have a relationship, you want to extend it.
Yes, so, but, for example, the same manufacturing plant is manufacturing the tires for both the products. So the plant is already approved.
Yeah.
What needs to be approved is just the product.
True.
So if we were a truly new player, first I would have to get my plant approved. Then I would have to get the product. So I've already done half the process. Secondly, also, we've been spending, or if I can say so, we've been investing a lot in our brand. Within the India space today, BKT Tires is a relatively acceptable brand.
Yes.
So there is also a lot of acceptance from the end users. So that will also play in when the OE puts in this tire. It will, for the end user, it's not a new name. They would have seen this name. They would have, a lot of them, at least in the urban sector would have, in the rural sector would have used some of our tires.
Yes.
So that acceptance comes in. So that's why we are in between, between being a new player versus being a on-road old player. So we are in between. We have half the expertise. We just need to cross the other half.
Because I'm talking from a point of view like, the large passenger vehicle players like Maruti and Hyundai, or for that matter Kia or, Mahindra, you have a relationship because of the off-road tractors which you supply to them. But for pure play players or pure play two-wheelers, how do you navigate that challenge?
So I think that challenge will always remain there. I think it's a journey we will have to make. And we will have to walk the path to getting there. But maybe we focus on somewhere where we have the relationship, grow that, and then use that to learn and you build up the other relationships in the meantime. There are also a lot of newer manufacturers who are coming with EV sort of a ready setup, who would also be new in the field. So that way, there are a lot of new opportunities also coming.
This industry is also looking at a tech transformation which is coming in, right? You have smart tires which are now in place. You have TPMS, which is the tire pressure monitoring systems, which most of the vehicles have it now today. Fleet management services. Some of the OEMs or some of the players are providing these kind of services to their customers as well. How are you looking at the industry's transformation from a tech point of view and adoption of tech?
So even on our existing tires, we give TPMS for the mining fleet. We have smart chips. We are already working on that. Some of the export requirements need smart tires, so we are already, it is a work in progress already for us. We have actually also adopted a lot of AI-enabled tools to further improve the serviceability related.
Okay.
So we are also, we have to adapt to it even in the off-road space.
Okay.
So it's not just that it's only on road, but it's also on off-road. So we are already, as I said, we are already doing a lot of these things. We only have to take it across both the verticals.
And you see that as the edge for any tire company to succeed, because adoption of that tech is the way forward for them?
100%. So there are different technologies that we are working on. So TPMS you mentioned, smart tires you mentioned. We were enabling AI in our work and serviceability through AI. So that is being looked into. Also, there are a lot of specific technology needed. So in the agricultural now, with the soil sustainability being a big chapter, or even at BKT, the soil pressure is being looked into, the amount of soil pressure that the tires are impacting on that. So, we've got the IFBF technology in those. So every product of ours would have some sort of a new age technology enabled to make it compete with the world.
And what about sustainable materials? Because that's also something which every company is now looking at, ensuring sustainable material for tires.
Yeah, so we are also working on that. We've started in a smaller way. It's under trials, and in the next 6 to 8 months, you'll see a lot of pivot towards sustainable material.
As a tire company, how are you looking at the entire supply chain? Because you are not only supplying in domestic market, but as you said, to over 100 countries globally, 160 countries. So supply chain forms the backbone for you,
yes,
because you're the Indian multinational from a tire point of view, right? How do you ensure that you have a seamless supply chain, in that sense, and what kind of emphasis are you putting on ensuring that that can be replicated for consumer tires as well?
So I think big aspect is our network. As I mentioned earlier, we have a network to cater to pan India. Even exports, we have the network which is being done. So I don't see a big challenge in supply chain. It's a duplication of what was being done. The raw materials are similar between both the set of tires. The containers in which would be exported would be similar. Yes, there would be now some changes. These would be a little high speed. Those would be a little lower speed. So those technologies would be a little different. But apart from that, I don't think there is much difference. Even in the containers on the off-road, lower tonnage would go because of the volume. Versus in this, you would have a lot more tires being shipped in one container. So I think those are very marginal changes, but we don't see a big difference in that.
Rajiv, it was a pleasure talking to you today. Thank you very much for joining us on Deep Dive.
Thank you.
Thank you.